good, Dom? Today, what we're going to cover are the recent changes that just went through as of December on the as-is contract. There's also a number of addenda that were changed, and we'll do follow-up trainings on those addendum. For example, the homeowners association. There's a couple of new addendums that were added. There's a couple of addendas that were added for broker, buyer comp, and so forth. Right. So we'll get into those in follow-up trainings. Today we'll cover the as-is changes, and we'll briefly get into the condominium addendum changes. I know condominiums is very popular purchase down here in South Florida. Let me get the lights. Beautiful picture of a cheetah. Yeah. All right, so on the as-is contract, I have the highlighted / red version of the changes. You can see here the addenda that were updated. We're gonna do a follow-up training in that addendum for those addendums.
Basically, almost all of them.
Pretty much. All right, that's better. Okay, so
Can you send a PDF with this or no?
Yeah, absolutely.
Thank you so much.
Well, you guys do know on your transaction desk, the forms have already been updated. Okay, so there's nothing that you need to do additionally on your end. Everything's already updated for you. But it's important that you know the changes that took place. If I can get my computer going. Okay. This is our live stream. Everybody say hello.
Hello.
All right, hang on. Massive technical difficulties. Let me try this. Extend. Okay, there it is. Bring it back. Now we'll do boom. All right, we're live. Here we go. We've already gone over the changes that were made to the as-is contract. I want to say the October version or so forth. So we're not going to go over those changes here again. But make sure that when you guys are filling in the as-is contract, that your version says December 2024. You could always see the version you're using on the as-is contract here. Okay. So the first couple of changes that stand out is they've added this line 140 on the as-is that now says seller closing services and buyer closing services. This additional verbiage here, it's minor, it's not a big deal, but buyer and seller closing services. It's defined on line 168. Closing services shall have the meaning ascribed to that term in section 627.7711. Each party shall bear their own closing services fees payable to closing agent or such other providers as each party may select. And this is a big change to what we previously had, right? So usually, I don't know how you guys handled it. Maybe you can give me some feedback. What do you usually check off here on these options, right? Lines 172 to 1. And if you're representing the buyer, and the listing agent tells you they want to use their own title company, my experience has been that we typically just agree with the listing agent because they're the listing agent. You don't want to lose the transaction, right?
Right.
But if you already have an effective and executed contract, this provision has always said buyer shall designate closing agent. The previous versions also had it.
Yes.
So if you select this one, the seller agrees that they sign. There's no reason for the buyer not to be able to select their own title closing agent. Right? Now, if we look at the first page, typically, whatever we put here is the default. And we assume that it's the default for closing agent, and we assume that this is the closing agent, but this is only the escrow agent. Right? The escrow agent is not the same as the closing agent or the title agent.
No, it's whoever's holding the money.
Yeah.
This could be an attorney, this could be another title company, this could be another escrow agent. It's just somebody that's holding the escrow, right? And then escrow laws apply to that person or to that company. But it doesn't mean that whomever you put here will be your closing or title agent. Okay. Now, in the event that, let's say you put here, or you get an offer representing the seller, and you get, XYZ law firm as the escrow agent. That's okay. It doesn't mean that your client is forced to use this title agency or that attorney. It just means that they are the escrow agent. Okay. Now, if you want South Florida Title to hold escrow, then you have to change the first page. And it's important that you should not just cross out the first page. You should make a new first page so everything's clear and clean on the first page of the contract. Right? I know we go back and forth sometimes and we scratch some things off, we initial, that's fine. But on the final version, just create a new first page. Okay. Any questions there? So there's been plenty of times where, we're helping a buyer's agent negotiate the terms of a contract, and the listing agent is just adamant about the seller using their own attorney. It's important that you guys know the seller can choose their own attorney independent of whatever the buyer's closing agent is. It could be two different people.
For seller's docs.
Yes, for seller's docs.
Yeah, but if you have the buyer, is it true that the closing agent has to be an attorney?
To draft seller documents, it's an attorney that has to do it.
Okay.
It could be a title company with an attorney, like that has an attorney as follow. But it cannot be just a close or a title agent, for example. In order for you to only represent the seller and draft the seller documents, you have to be an attorney.
Okay. Yeah, because I tried that here with Maria several times. She goes, no, I can't because I'm not
Yeah,
an
South
attorney."
Florida Title cannot only represent the seller. Okay. But if you're representing your buyer and the listing agent tells you we have our own attorney, great, phenomenal, have fun. We have our own title agent, South Florida Title.
Unless it's in Boca,
Yeah,
different.
it's different. Okay. Now, if you're outside and different
Also, Broward, Miami.
it changes a little bit.
Yeah.
But focusing just on Broward and Miami-Dade, right? So what I'm saying is there is no reason why, if you're representing the buy side, on the buyer side, for you not to be able to select your own, or the buyer select their own title agent, South Florida Title, or whomever it is that they use. Obviously, South Florida Title would be preferred,
Right.
but keep that in mind. So when you're negotiating terms, you're going back and forth, and the listing agent is just adamant about this, cool. Select your own closing agent. I have no problem with that. My agent will be South Florida Title, right? And then I'll make a note on page 11 or 12 on additional terms here. So in additional terms, I'll just add closing agent for seller and then I'll put their information. Closing agent for buyer, and then I'll put their information. I'll say title closing agent, right? Because you want to make sure that you're just clear about everything. Our title agent is issuing title insurance for the buyer. We're handling the closing. You can use whomever you like for the escrow. I really don't have a preference. But my buyer's closing and title agent is South Florida Title. Okay? Any questions there?
In that case, the buyer has to pay the title insurance.
Yeah.
Whoever picks, picks.
It should always be whomever picks
Uh-huh.
the closing, the title closing agent pays for the title policy. Now, if you read here, seller shall designate closing agent and pay for owner's policy and charges. If you're financing FHA, conventional, 10%, 5% down, 3% down, etc., that owner's policy is minimal. There is no reason. What I'm saying is that the seller paying those fees does not offset the benefit of you choosing your own title agent. The charges are minimal when you're financing most of the purchase anyways. Okay? So when they tell you we'll pay for the owner's policy, trust me, it's minimal. There's a big difference when you're now buying cash and there's no loans involved. Then at that point, it becomes a bigger charge. Exactly. Okay. So here it says, and pay for owner's policy and charges. Buyer shall pay premiums for any lender's title policy. That's the expensive one. If your buyer is financing. So every time that you guys have selected seller designate and they'll pay, you've done your client a disservice. The fees do not offset the benefit. Some things that could happen. If you're working with a title agent, title company that you don't know, there may be some exemptions or exclusions to title insurance that they don't tell you about. It's in the fine print. Most people do not read through the entire title policy or title commitment. So you'll have your client closing with title exemptions and so forth that may not benefit your client. Title company that you don't know may also keep some information from your client that otherwise may be valuable or they may be interested in knowing. They may withhold, easements, things like that until the very last minute that you're sitting at the closing table. And then at that point, what are you going to do? Right? So it's important that you guys work with a title company that's going to bring forth any concerns, anything that may affect the title, even after closing. You want to make sure that you work with someone that's on your side, on the buyer side, rather than on the seller side. I've been doing this since 2009. My God, it's gonna be almost 20 years. Yeah, thanks. I've seen a lot of things happen on title. We focus on the finance side, and we just don't overstep whatever the buyer's agent is doing with the buyers. Obviously, if there's some concern, we'll bring it up to the buyers and we'll bring it forth. But at the end of the day, the buyers mostly rely on the buyer's agent and they trust them for most of the transaction, even for financing. So when that buyer relies on the buyer's agent to bring forth certain things that may affect the sale, and that buyer's agent just withholds certain information, it's to the buyer's detriment. And if the title company is chosen by the buyer's agent, more often than not, they're also going to keep quiet, right? So it's important that you guys, if the listing agent is telling you seller shall designate, do not allow it. It's just not worth it for your client when they're financing or even when they're buying cash and so forth. So keep that in mind, okay? So that's new. They got rid of this verbiage. It says charges for closing services related to lender's policy endorsement All of that stuff went away. So buyer shall designate closing agent. I'm reading on line 176. Buyer shall designate closing agent and pay for owner's policy and charges, and premiums for, and then it goes on to say, and any lender's policy, etc. The lender's policy is the expensive side of the title policy. So you have the lender's policy and then the owner's policy. On the loan estimate that we provide our clients on financing, you'll see that next to the owner's policy, it says optional, even though it's not really optional. But that's the portion that the seller would pay. Again, it's a very small percentage of the title cost. Not worth it. So this was the major change that happened on the as-is contract as of December. So you guys now know there is no reason, if you're representing a buyer, there is no reason for you not to be able to choose South Florida Title as your buyer's closing agent. You can let the listing agent choose their own title for seller documents, seller representation. That's fine. We don't care. On the buyer side, we choose.
And who is going to be the closing agent?
South Florida Title. So for example, I think your question is if we choose South Florida Title and then the seller chooses XYZ law firm. We represent the buyer on the title insurance side. So we'll draft all of the documents for the buyer's side of title insurance. The seller's attorney will draft everything seller. Okay. They'll send it over to underwriting on the title side. They'll clear the title, and then that's when you'll be able to move to closing. But it'll be for the seller. It's handled by the seller side law firm or whomever they choose. And then on the buy side is the same thing, whomever the buyer chooses.
They will send it to the buyers.
Correct. Correct. Not to be confused, if the seller has an attorney, it's worth mentioning, right? Just like the buyer can have an attorney. That's independent of the title and closing agent. Many times a seller will have an attorney just reviewing documents for them at a small fee. Same thing for the buyer. Buyer will have an attorney just reviewing their documents. That's independent of the title agent. It's worth mentioning. Keep that in mind. Sometimes you get the buyer or the seller saying, can I have my attorney review? 100%. Their attorney can review any documents. It's also worth mentioning, you never want to discourage your clients from pursuing legal counsel if they so wish to. Everything else remained the same since the last update that we did. They got rid of this verbiage here. On the buyer's default, the portion of the deposit, if any, paid to listing broker upon default by buyer shall be split equally between listing broker and cooperating broker, provided, however, cooperating broker share shall not be greater than the commission amount listing broker had agreed to pay the cooperating broker. So before, if your client defaulted, in my experience, it was assumed that the listing agent would just keep the deposit, and that was it. Okay? There was verbiage in there that protected your client, or at least you, from keeping some of the commission, or protected you in the sense that you were able to keep some of the deposit. How do you guys handle security deposits? Do you tend to go on the higher end, or do you just try to put the minimum allowable possible? What's your take on security deposits?
Depending on how much they have and how I try to get as much as possible to make it a good contract. So, because if you have a lot to lose, then you have a lot to gain if you close it.
Okay. Let's say you're representing the buyer, 20% down, $500,000 purchase, so that's $100K in down payment for financing. Mm-hmm. And let's say they have $500K in the bank and they want to make an offer. How would you handle a security deposit there?
I would say, are you really interested in the house? Make it worthwhile so they'll accept your contract and accept your offer. I would say 10 to 20,000 if they have it available.
Yeah.
If people don't have it available, they're going to be looking for financing. Maybe they're going to have a.
Assuming they have it
80-20,
available.
An 80-20. Assuming I try to get as much as possible. You want to make it an offer that the people can't refuse. You know.
That the seller can refuse.
Exactly.
Yeah. Okay. It definitely shows commitment. The higher your security deposit is. Anybody else?
I would go through and maybe do the minimal possible in the initial, wait and just make sure to date it right past the inspection period. And then for the second, maybe do like 20,000 or maybe do 50,000.
Yep. That's usually the default that we go to, right? So if we are helping negotiate any terms, usually what we do is the minimum upfront, and then the larger deposit as a second deposit after we've cleared the inspection. Right? Typically, we do inspections for 10 days. That should give us more than enough time. If we're able to get 15 days on the inspections, we should have not only the inspections done by then, but also the appraisal. So that's like, a very secure contract for our buyers at that point. So thanks, Dom. Yeah, that's usually what we go to. Minimum first, and then after inspections, the larger deposit. Any other comments? Okay, so now they get rid of this verbiage, obviously, because it kind of defaults back to whatever your buyer agreement is, and you should not have an effective / executed contract unless you already have a buyer broker agreement and a broker to broker or broker to seller agreement. So makes sense. That's no longer applies. Nothing else changed. We go into just kind of the addenda that were added or changed and so forth. Again, we're going to do a follow-up training to cover all of these changes. If you want to kind of do a little bit of study beforehand, check out these two. It doesn't highlight it, but I'm highlighting addendum FF and GGs right here. These are all in your transaction desk already. We'll quickly go over the new condominium rider, new condo addendum. The best way, and this is just kind of like a side note, the best way to verify if you have the right addenda that belongs to your contract, right, is to make sure the letters match. Okay? For example, the FHA addendum on the as-is contract is addendum E. Very often we get addendum J or F or something attached to the as-is, and it has nothing to do with this addendum. It's for a different contract. But what happens is if you search FHA addendum, either on Foreign Simplicity or .loop or something like that, what comes up is the FHA addendum for the other contract, not the as-is. So people just kind of use that one as default, but it's the wrong addendum. Okay? It doesn't apply to this contract. So make sure that whether you're doing, homeowners association has to be letter B. Any addenda that you use has to match this letter. Condo rider, letter A. So we have the right addendum.
It also has the bottom where it says as is, the Florida bar, the bar as is at the bottom. So you have to match up what it says down there as well.
It's the CR7. Mm-hmm. This is the as is, kind of the abbreviation for the as is. But make sure it matches the letters. It's the simplest way to kind of confirm it. On the last revision that we had for the condo rider, we went over all of these things. The first of right refusal, we got deep into a conversation about what that meant, what it was, etc. Same thing for association approval. The right of first refusal, very quickly, anybody want to chime in and say what it was? Anyone that remembers?
Well, I wasn't here, but basically, if something, a property abuts another one, they have a right to know that it's for sale, and they have a right to buy it before you sell it on the open market.
This has to do with the way the condo bylaws were written, and some bylaws, and this is why it's important. And this is also something that we went through the last condo update, where all of the documents that are required to sell and purchase a condominium. It's a long list. It's not as simple as just listing the property for sale and off it goes into the market. You got to make sure you prepare yourself, prepare the file to be compliant with all of these documents that are due from the seller to the buyer. You meet deadlines, you're compliant, etc. Not only to protect you and your seller, but also to protect the transaction.
Do you have that information yet or something that's it?
I do. I'll give it to you afterwards. Give it to you after. So some bylaws, some condo bylaws give the right of first refusal to the association owners, etc., which means that if a property goes up to sale and the association has the right of first refusal, the process is property goes up for sale, they get an offer. Before the seller accepts that offer, they have to present it to whomever has the right of first refusal. That person or party, etc., has to say yes or no within reasonable amount of time. I want to say 48 hours. Don't recall. There is a limit, but reasonable, right? 24, 48 hours, I want to say. But they'll have the right to match that offer that the seller received or not. If they match it, now the association or whomever has the right of first refusal, has the right to purchase that property before anyone else. Right? So process is you list it, you get an offer before the seller accepts, then it passes on to the right of first refusal, and then from there on it goes. Cool.
And where we find out if the association has the.
It's in the condo bylaws.
The bylaws.
Yeah. This is why it's important to get those documents up front.
By the way, VA doesn't like that.
Who?
VA don't. They don't like that.
Yeah.
They don't accept it.
Yeah, they're strict. FHA, VA, they're strict to that. There's also some condominiums that have rental restrictions. Dominic and I were dealing with one. We were trying to do a refinance. So the condo has 5 buildings. Each building has its own like sub rules. Yeah, they did. So they each had their own like management company. I think it was like 3 management companies, right, Dom, or 2 that they handled.
Central Village is like that. They have like
Yeah,
4
Century Village is a perfect example. But this building is like, I mean, it's not the project itself. It's 5 buildings, but they're small buildings.
Right.
And, you know, we got this client because they were trying to do an FHA refinance through Rocket Mortgage, I think. And immediately I looked at it and I said, look, you're wasting your time. I'm sorry they made you pay for the appraisal, but this property is not FHA approved. So there's really no reason why you should have even ordered an appraisal. He said, look, man, I maybe you can help me with just a regular refinance and so forth. So we started looking at, you know, HELOCs and conventional refinance and so forth. So I asked him for the bylaws, and in the bylaws, we found that it has his building out of the 5 has a specific restriction on rentals. You cannot rent your unit. Imagine that, right? So the verbiage, the management company had told him, you could only rent your unit if you're grandfathered in. So what they've been doing is, if you're renting your unit from like the 1980s, you can continue to just renew or get a new lease or whatever, as long as you just keep renting it.
But if you stop and
But-
start again, then you're on.
No, but that's not what the condo bylaws said.
Oh, my.
Condo bylaws said that if you're renting your unit at the point that those bylaws were issued, then you're grandfathered in for that lease. But if you renew the lease, that's it. You can't renew the lease. You now have to own it. You have to live in it. So these people were kind of maybe knowingly or unknowingly,
In default.
yeah, you know, not applying these rules and regulations from the bylaws equally amongst the owners, and they were kind of handpicking whomever could rent their unit or not. And yeah, and that opened up a whole can of worms. I was like, look, figure this out, call me after. This is too much. But anyways, that's right of first refusal. Condo bylaws are really important. We went into this whole special assessment prorations things the last time. Very insightful. This is where some of the changes started. Buyer's request for documents. If you're representing the buy side, you always want to request these documents, right? So when you're adding the condo addendum, you should have always and continue to select the request option. If you say you do not request, you're essentially waiving any protection your client has for after reviewing the condo documents, whether or not they want to proceed with the sale or not. So always request the documents.
Sometimes it's very helpful to have that ace. You know,
Very.
on your sleeve.
Yeah, very. If you are the listing agent and you get a contract, condo addendum that says that's blank here, assume they requested and provide them with the documents. Okay, and you want to make sure that they initial on number 7.
Can they be uploaded on some attachment on the MLS?
As long as you can confirm that they've received it, yes.
Okay.
If you upload it to the MLS, I mean, who's to say that they downloaded it, right?
Exactly. It doesn't really cover you.
Yeah.
Until there's
Yeah.
something-
Always avoid the argument rather than try to win it afterwards. So I would
Actually,
just
I do both. I put it up there so that people know what they're getting into, and rentals on highlights things.
yeah, and then if you get
And
the
then
offer,
When I get the offer, I immediately send them the
email, boom. You should have an email draft, like a template already with all of these documents. When you take on the listing, you should already start documenting all of the documents required
Right,
for
and the
for this.
application, I also post the application.
Yep.
So that they
You-
have everything, and they know what they're dealing with.
Exactly. The list, if you guys want to know it, it's here, it's in this paragraph. So it is declaration of condos, articles of incorporation, bylaws, the most recent annual financial statement, an annual budget, and frequently asked questions. Sometimes the management company or the agent will tell you, we don't have the frequently asked questions. Make sure you put that somewhere in writing that you don't have it, right? Financial statements, annual financial statement and annual budget. Make sure you get the approved budget, not the proposed. Proposed doesn't really tell us anything. Beginning of the year 2025, many budgets are already expiring or have already expired, and there's a new 2025 budget that has been put into place, approved by the owners, signed off, etc. So make sure that you get the approved budget. Additionally, ask for the insurance policies for the building.
Oh, yes.
If you are the listing agent, even though it doesn't specifically say you have to provide the insurance policies, the master insurance, provide it and add it somewhere in, just add in the verbiage, also provided master insurance, flood insurance, etc. Make sure you guys include that. Reason being, you can make the argument that, hey, my buyer didn't know there wasn't proper flood coverage. I want to cancel the contract on, and if you provide a master copy of these master policies, they can't get out of the contract for whatever reason, right? So we always want to just over disclose, usually the better, right? That way it kind of protects everyone. Everyone's aware. There's nothing hidden. Everyone's, kind of, and then if they want to take a step back and everyone agrees, you could always, take it from there. But the list is here. If you guys want to go over it, I'll give it to you. I'll give it to you after
And then
after we're done.
also on insurance, on top of what you just said, it's the coverages.
Yeah.
Here in Florida, they've been raising up rates. Some of them increase the deductible. So when you get the documents to the lender, then the lender says, you know what?
We
I
can't do
cannot
it.
finance here because
Exactly.
the deductible is over the limit.
So now if you remove financing from a building, you absolutely destroy the building's value because you no longer have access to financing properties for purchase. So that pretty much lowers it lowers the pool of buyers that have access to buying your property. So it's really important that your owners, even yourselves, if you guys own condos, that you attend these annual meetings, keep an eye on what they're planning to do with insurances, because if they raise the deductibles or if they change coverages, they think they're saving money, but they're not. Be careful, okay? If you're representing the buyer, you'd want the buyer to know. And then, it's up to them to make the decision to buy the property or not, right? If it's a condo they absolutely love, on the beach, waterfront, et cetera, who cares? They're going to live there, right? But it should be their
40-year thing. Oh my God.
Should be their decision. Yeah. That 40-year thing.
That 40-year thing.
And then the 50.
This changed. So we went into
Every 10 years after that.
the changes that were done to this very, very thoroughly also. And, in the interest of time, I'm not going to go into each one, but it's important that you guys see the changes that were done here. Make sure that you're familiar with what it is that you need to provide the buyer and that your seller has to provide to be compliant and within the laws for selling a condo. Okay, you need to provide the milestone inspection. You need to also report any it's called deferred maintenance that is found. So the process is these inspectors come in, they'll give you a report with all of the maintenance that's required. Some items are more important than others. There's a report that comes out for the maintenance required. Make sure that you're also providing that to the buyer if you are the seller. It's not necessarily listed on the required documents, the deferred maintenance schedule, but doesn't matter. Provide it anyways.
What is the name of that?
It's deferred maintenance.
Deferred.
They may call it something slightly different, but it's the maintenance schedule from for the building. Any questions? Okay. Additionally, there's the structural integrity reserve study. This is the main culprit for all of these amazing special assessments that have been coming in. So all of these kind of laws, requirements, etc. The deadline for all of them, or I guess when they were hard put in, was December 2024. That's why you saw the majority of these special assessments take place towards the end of last year and now. It's because of that deferred that maintenance schedule. So once they did the inspection report, you also have the reserve study, the integrity reserve study, and that kind of breaks down the cost of all of these things. It kind of the management companies now have to create a budget. They have to account for extra fees or monies to be able to fix everything that came out on that report, to maintain going forward everything that came out on that report, et cetera, right? So condos, at least in South Florida, condos have always had a problem of mismanagement of funds,
Oh,
right?
yes,
These lovely association management companies.
yes.
I want to say that's the number one problem with buying a condo in South Florida is the mismanagement of funds by the condo board and the association management companies. Do you guys agree?
Embezzling, misappropriation.
Yeah. So when a lot of these laws came into after Surfside came into play, some people actually thought that this will get rid of some of the mismanagement of funds, etc. And I always said that problem is not going away just because you're requiring more funds to be allocated towards maintenance, which rightfully, it should. It's just not going to get rid of the problem. The problem is going to maintain, which is mismanagement of funds. You're now going to have just a more expensive mismanagement of funds. And that's one of those things that I wish I wasn't right about, but yeah, I was right about it. And you can see all the special assessments coming through. Nothing is fixed. We still have issues, so forth. So we do have a list of approved condos for financing. You guys have a client that wants to buy a condo, I strongly advise that we pre-qualify them and you show them properties on the approved list to start that's where your starting point should be. Because we know those condos qualify. We've checked the insurances, the budgets, and so forth. So that should be your starting point. Not to waste your time and the client's time.
How can we get that list?
I have to pre-qualify your client.
And then you,
Yeah. Well, I mean, I can give you the list, but I'm saying in terms of the approved list, it's also changing. Like sometimes some condos come off, some condos go on, right? So keep that in mind also. Around this time of year, so in a nutshell, the way we kind of build the list is through our lenders as they do the condo reviews.
We get approved, yeah. We get approved.
Now we know which condos
Are going to.
are approved, and so we start building that list as the year goes by.
Right, because the budget could have been different last year. and
100% it's different.
Exactly, yeah. So,
100%. But if we now verify the funds, the budgets, insurances, etc., and everything checks out, we now know that building qualifies. We add it to the list. If a building doesn't qualify, we also add it to the list, so we know who's approved, who's limited, and who's not.
The FHA used to have one online that who was
That's-
approved or not. Is
That's
that
the only
being-
list.
Is that being kept up?
It's the only list that counts.
Yeah.
The online FHA list.
Yeah.
If you Google,
And BA also.
Oh,
But the FHA one is more.
the VA is a little bit different. Once you go on that list, you're on the list.
Yeah.
So if you have a client that's approved for a VA loan and they want to buy a condo and the condo's on that list, you're good. Yeah. The VA loan is easily, hands down, the best loan there is. This is the link for it. If you're not going to this website to verify your
That's where I go.
What is FHA?
HUD.gov.
here, this is what you should search for. If you search that, the HUD website is the first one that comes up. See it? Yeah,
Are
here.
you sure it's a hot one?
Yeah, you gotta make sure it's the HUD one.
It says .gov.
But if you search for this, it's gonna be the first link, and then it looks like this. Okay, go back. Yep, here. This one?
no.
No, the other one? Here? Yeah, so here, I'll do it for you guys.
The approved FHA.
And we'll kind of just close with this. So let's say state of Florida, let's say Broward, and let's say status approved.
The condo name is sometimes iffy because sometimes they have
Yeah.
other names that they incorporated on
Yep.
there. And you think that it's X and
I-
it's Y and Z.
I rarely ever put in a condo name.
Well, what I'm telling them when they're looking, don't look for the
Right.
exact condo name.
Another
Because it's
factor
not
is
always
there's some condos that they
accurate.
have like different phases.
Exactly.
Like phase one, phase
Phase
two,
one,
phase
phase
three,
two.
and phase one is
And it won't
approved, but
come
phase
up.
two and phase three are not.
Exactly.
So-
you gotta make sure that
So let's do Broward, let's do approved.
And zip code is good. The zip code is good.
Here's your approved condo list for Broward. 1, 2, 3, 4, 5, 6, 7, and 1, 2, 3, 4, which is Emerald Hills. 4 out of the 7 is one condo, so really you have 4 approved condos in Broward for FHA. And Point of Americas is coming due for expiration here. So you better get your application in before it expires.
You better
So-
get it close.
You gotta close, eh?
Well, as long as so if you apply and you lock your rate and they issue an FHA case number, you're good. Yeah, yeah,
You're in.
Even if they change the budget.
yeah.
Mario Century Village is not there?
No, Century Village is not even for conventional. Approved.
There's like only one or two lenders that don't want either.
What happens with Century Village is that they don't own the lot; they're on a land lease.
They have a recreation.
So you know, there's 2 types of ownerships. There's leasehold, and there's fee simple. Right? Fee simple is the majority of everything down here in
Right.
South Florida. Leasehold means that the building that or the property that you're buying, you don't own the land that it's built on, or it's owned by a third party, and it's rented. It's
There's
leased.
a fire that's there.
Hence
You
the
know how many
leasehold.
years they have left?
You could.
It's,
find out with the
They
association.
did like a 99-year lease,
99.
like 40 years ago or so.
It was in the 80s.
Something like that.
Somewhere in the 80s.
Yeah.
When they built
When
the
they built
property,
them.
Yeah,
and
and
you
you-
have like
And they also have a recreational.
Yeah. So, well, now, you don't have to wait the 99 years afterwards. What happens is, as you get closer to that deadline, less and less lenders will lend, because what is going to happen the 99 years, you have to renew the lease and so forth, right?
some of them will rent.
Or not. But you have to renew my understanding is the most common thing that happens is you renew the lease. It will likely be at a higher cost.
And then
Yeah.
HOA fee will be higher and all that.
Yeah, think about that. So that's one of the issues with financing in Century Village is that you're in a leasehold, you're not on a fee simple property. And additionally, there's a recreational lease. So there's parts of the project that they lease back, or that's leased, which is the rec center, right? Where like everybody wants to go to.
Right on the golf course.
Yeah, they don't own that.
They don't
It's
know.
leased. So now conventional guidelines do not allow for financing on projects that have recreational leases. Century Village. Now Century Village, if I remember correctly, has like 1 or 2 buildings that don't participate in that rec lease.
But they're the really old.
But it doesn't matter. They're still leaseholds.
Yeah, the ones that don't have even central AC or
Done,
drive
yeah.
inside the unit.
All right. So in closing, that's the Broward list. Let's do the Miami-Dade. And Miami-Dade is actually beating Broward. Let's go. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 FHA approved condos. Look, the Icon in Brickell.
I was just gonna say that some of them, the cheapest apartment you see is like $800.
Well,
so
think about it.
apply for an FHA loan on a Halo,
Think about what
$800,000.
financing, available financing does to a property.
Yeah.
Right? You're now able to buy FHA properties in the Icon.
Well,
Now you have
could,
more access
unless you
to these
put like
properties, so
60%
now
down.
it goes up, right?
I have a dumb question. I've never sold one, the co-op, and I kind of stay away from co-ops. What is your take on the co-ops for financing? What happens there?
Yeah, they're
'Cause
very
that's kinda
special,
like for the right of refusal, the co-op will have to.
very
agree
very
with the
special
corporation.
guidelines for financing.
There's a
We'll-
few, there's a
We'll
few.
we'll
not
talk
a lot.
after because
Okay.
yeah, that's a long
I've
story.
never had one, but if one comes up, I'll call you, so don't worry about it.
So this is
I've never had one for a co-op.
so
And
this
I-
is
I fear them. I fear
popular
them.
here.
guys, and it's important that you know if it's not on like when you're putting up a listing, you put the type of terms accepted. Sometimes we put in FHA
FHA approval.
without actually verifying,
Mhm.
right? It's a common thing. So just because a realtor puts on the listing that it's FHA approved, do not assume that it's FHA approved. It could be approved for financing conventional with 3% down. We might be able to do that. That's fine. Even 5% down, we could probably do it as long as they meet the budget, the insurances, the 40-year inspections are done, etc. Can probably do it, but it doesn't mean that it's approved for FHA.
Right.
So keep that in mind.
And some other times it happens that the seller bought with an FHA because it was approved when he bought the property, but now it's not.
Well, if it's an assumable loan,
Well,
that's different.
yeah.
Another kind of thing to keep in mind is if you have a seller that financed a unit, 10, 15, long time ago, and it's a conventional mortgage, they never missed a payment, etc., and it's a Fannie Mae or Freddie Mac mortgage, let us know if you're representing the seller, because we may be able to finance those properties. There's a way around the requirements that particular property may qualify for. It's a little bit of, I guess, that's a fine print in the lending guidelines, right? So if you're representing the seller in a building that doesn't qualify for financing, but the seller has financing, conventional or FHA, let's talk, because we may be able to finance that purchase, okay?
Are there any
Anything-
assumables left in the world?
I haven't seen one in a while,
Okay.
but I'm assuming there's. So any other questions? Cool. All right. That's it, guys. I'll see you maybe in 2 weeks for the follow-up on the changes to the rest of the addenda on here.
Thank you for the coffee and thank you for the.
Thank you guys.
Thank you. Thank you. Applause to them.